and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I'm Hiral Datia. Two companies that we are looking at in today's session is one Cholamandalam Investment and Finance and two Max. Both the companies have reported numbers. Let's quickly first go across to Cholamandalam Investment. If you see from an earnings perspective, the AUM growth has been robust. There are minor challenges in the new business, but clearly the growth outlook stays absolutely strong. Let's actually welcome in our guest to discuss more. Joining us is Arul Selvan, President and CFO at Cholamandalam Investment and Finance. Arun, good morning and welcome to the show.
Morning. Yeah.
Arun, my first question coming to you is, clearly has the number met your internal expectations?
Yes, we have done good growth and profitability is as per our targets across all parameters, including stage three, which is the delinquency reporting. We have improved over Q1, and it is actually one of the best over the last few quarters. And we have also raised capital, though it came in the first week of October. So in all counters, we look really on a good solid footing.
Right. Clearly, the NI as well as the other income has been higher, on the back of which we've seen a profitability boost as well that has come in. If you talk about the net interest margins in the second quarter, that has improved. What's the trajectory looking like going forward? Are you expected to maintain similar levels, or are you expecting a further improvement to come in there?
It should improve a bit, though marginally. Primarily, it is dependent on two factors. One, the cost of funds staying where it is or improving marginally. The second is the vehicle finance book, which is a fixed rate book, which is where we could not, catch up on the NIM cost of fund increases and therefore the NIM levels earlier, is now changing profile as we keep on adding new portfolio with a higher yield levels. So vehicle finance book has started, improving yield, and that should also contribute to the NIM improvement. So we see NIM improving over the next 2 quarters. Yeah.
Okay. And how big a factor is the repricing of the fixed rate book, contributing to the expansion in terms of the net interest margins?
See, the vehicle finance book is around 60-61% today. So, but it will get repriced progressively because still a large part of the book is the COVID periods book, which has been when the rates were low, and so we had also passed on to the customers lower rates. So that book remains at those lower rates, while on the other side, the cost of funds has increased because most of the cost of funds are linked to either MCLR or repo or the T-bill. So we had to manage this increase. So this is a temporary phenomenon because the reductions were given by RBI as a relief towards COVID and thereby an expected increase in credit losses at that point in time. If you compare, we are almost at similar levels of pre-COVID on cost of funds. So we need to move back on the yields. And I think over the next 4 to 6 quarters, the yields of vehicle finance as an entire book will start changing color. And therefore, then you'll see some NIM improvements.
Okay. From an asset quality perspective, overall it has remained stable. However, with the expected increase in stage three of new products, how are you seeing that trajectory?
See, new products, I think that yes, we are also cognizant that there has been some amount of concern raised. But frankly, the new product which has shown some amount of spike is one part of the unsecured business, which is like 1/4 of the overall unsecured business, which is let's say around 1.5% of the book today, around 2,000 crores. So that book has shown, and there we are covered by FLDG, and we have tried to explain this, but I think there is a little bit of an, communication gap or understanding issues, but we will allow things to present by themselves as we move into the next few quarters and show that it's not of a great concern. But that book, yes, it is a book which is unsecured and has a tendency to go to the levels where we are seeing them to be right now. So that is again within our expectations, and we see that it is not going to swing too badly. But I would leave that to the judgment of the investors and analysts. But let them come back, let them realize what we are saying is correct or wrong as we move into the next few quarters.
Right. And with regards to the fintech partnership portfolio within the new business, will you be maintaining similar growth levels, or do you think you will be slowing down in terms of the growth aspect of this segment, taking into consideration the stress that we are looking at?
See, all the new businesses, whether it is the unsecured part, which is again broken into two parts, which is the through the fintech and through our traditional route, as well as the SBPL, which is the small business personal loans and the SME loans. All these new businesses, when we started 18 months back, they were on a low base, so the growth percentages seem to be very high because the base is very small. But as we move forward, the growth percentages will change, but in value terms they will be incrementally increasing. So I don't know how people would like to read it. If that growth percentages seem to have dropped, then it can be read as that we are slowing down. But if it is read as an absolute terms, we are increasing the disbursements as well as the asset levels, then we will be growing the book. And our intention is still to grow all these books.
Okay. So, with the fundraise that we've seen, the recent one, will you still be able to maintain a ROA of over 20%?
Yes. No, ROA is not 20%. ROE you are
ROA,
talking, I
yes,
think.
sorry, I beg your pardon, ROA.
ROA,
Yeah.
uh, yeah. No, ROE, we are never committing 20%, though we may be delivering in the 19% range. I think we should be comfortably above the 17 of 18%, and we will not let that drop. So there will be some bit. That's where we took the fundraise also into two parts: one as equity and one as convertible debentures. So the conversion happens as and when we need it over the next 2 years. So this will help to sort of manage the ROEs, which will be in the 17 of to 18 of percent.
Right. And my last question coming to you is across segments that you are operating, where are you seeing the growth to come in from, and where do you think there could be some bit of stress that needs to be monitored?
See, the last quarter had been a good quarter across all business segments. Vehicle finance grew, LAP grew, HL grew, and the new businesses also grew well. And we see that sort of repeating as we go into the next two quarters, because the festival season seems to show a good growth in the auto, especially in the passenger vehicle. And we also see a good traction in the used vehicles. But auto is a little bit cyclical, so you may have to see some reductions over maybe next few quarters, not the next few quarters, but after that it will go through some cycle. So that is the whole point of we diversifying into multiple product lines, which could help us ride different cycles of different products.
Right. So I think lots to watch out for from here on. Thank you, Arun, so much for joining us on the show and sharing your views as well. Clearly,
Thank
if you see
you.
from a stock price performance as well, over 50% is the kind of gains that we've seen with regards to where Cholamandalam Investment and Finance are concerned, and this is over the last 6 months. So interesting moves coming in there. If you talk from a brokerage perspective as well, majority of the brokerages have a buy rating on the counter. You have a Jeffries, which has clearly said that the growth outlook stays strong and they stay positive. They have a buy rating and a target price of a price target which is almost 1350 on the counter. So that's with regards to where Cholamandalam is concerned from a Jeffries perspective. If you talk about Nirmal Bang institutional equities as well, they also have a target price of 1350, which is an upside of almost 19% from the current market price. And overall, if you go to see they have changed their estimates, target price, and the rating on an upward move. So a buy rating coming in by Nirmal Bang institutional equities as well with regards to where Cholamandalam Investment is concerned. Clearly, the key focus for them now is going to be in terms of the net interest margins trajectory, which is expected to see some good growth. They are cognizant of the stress that is coming in terms of where the new businesses go. However, they are trying to see what can be done on that front. ROE in terms of that around upwards of 17%, but below 20% is what they will try to maintain. So 17 to 19% is the trajectory that we're looking at with regards to where the ROE is concerned, with regards to where Chola goes. And very lastly, in terms of the asset quality as well, in the fintech originated unsecured loans, that has increased, but this is only around 1.5% of the total AUM, and they should be delivering almost a 29% EPS CAGR with regards to FY23 to 26 is a lot of the brokerages which are indicating. So that's with regards to where Cholamandalam investment finance goes. But let's quickly shift focus